decision making by the man and woman is about equal and equality. And stressful situations appear that men become more uh, egocentric and make more risky decisions, while women become more empathetic and their decisions making improves. Research on ruminations or reflecting at a length offers further insights into gender differences in decision making. Women spend more time men analyzing the past, present, and future. They are more likely overanalyze problem before deciding and to enhance to decisions one make. This can make problems harder to solve, increase a regret over past decision, and increases over depression. Women are nearly twice as likely as a men to develop depressions, but why women ruminate more than men is not clear. Some research points to difference in the hypothalamus superiority and tolerance gland response. However, internal gland responses. However, the gender difference seems to lessen with age. Difference are largest during youngest adulthood and smallest age is 65 when both men and women remain at least. Mental ability. Mental ability. We know people with a higher level of a mental ability can process information more quickly, solve problem more accurately, and learn faster too. You might expect them to be less susceptible to common decisions errors. However, mental ability appears to help people avoid only some of them. Smart people are just as likely to fall prey to angering overconfidence and the escalations commitments problem because being smart doesn't alert you to possibility that's research on remunerations, cultural differences, organizational constraints, decision making in the time of a crisis. During the COVID-19 pandemic of 2020, employees and leaders of businesses alike were forced to make extremely difficult decisions amidst chaos, confused decisions, and uncertainty. As Anjali Lai, a senior analyst at the Forrester eloquently described, unprecedented level of uncertainty with paired with a rapid flow of new information means people forget ahead with the neither and the template to the follow nor luxury of pondering every decisions or not decisions maker are the particularly susceptible on the basis of distortions during a time of a crisis. For example, expert credit rating agencies are more likely to provide negative or pessimistic ratings of the credit holders during time of a crisis, even when the pessimistic rating of credit worthlessness during time of the crisis, even when the credit worthiness of these of the targets people or the organizations would not be affected by the crisis. Furthermore, the decision made during time of the crisis are the more likely to be emotionally changed and the initially not only does not strain of the crisis and add an additional layer of the anxiety and the negative emotions to it. Typically decisions but the decision in and the themselves may become highly charged such as how doctors and the nurse had to be make the extremely tough Tough decisions has to be would receives treatments during the COVID-19 and pandemics relatively justice and the exercises of the decisions making. See the following sections. For the more decisions play as a huge role in time of a crisis and traded perceptions of the justices are the incredibly important during times of a crisis, influencing people's attributions. What about the further people's? Hi, yellow, hi, hi, hi. What's up, buddy? Nothing. I'm doing study. And how are you? You are all from where? Please do subscribe and like this live. Hi, hi, everybody. Hi. Okay, tell me you are all from where? Because some people are don't know different languages, so that I have confirmed it. Okay, okay. What's up? What's up? What's up? What's up? What's up? What's up? Hi, 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 hi. The 40 years older sniper. Write something. Write something. Write something. Write something. People, my dear friends, आप सभी कैसे हो? Good morning. Hi. Hi everyone. Good morning. Good morning. Good morning. Hi. 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 This book I am reading today. What is written here? Organizational behavior. Organizational behavior. Today is a big day because every mornings come with a new idea, new positive things. Rules for debit and the models. Rules for the debit and models. Debit, debit the receiver, credit the giver. Debit the receiver, cash drawn by Ashok for personal uses. Drawing personal use debit. Cash account, real account, credit. Credit was goes out. Debit the receiver. Debit the receiver. Credit what goes out. Debit the receiver. Credit what goes out. Okay, types of accounts: assets account, expense account, liabilities account, capital account, revenue account. Assets account, debit the increase, credit the decrease. Expense account, debit the increase, credit the decrease. Liabilities account, debit the decrease, credit the increase. Capital account, debit the decrease, credit the increase. Revenue account, debit the decrease and credit the increase. It means account, assets accounts and expense account, debit increase, credit decrease. Okay, liabilities, liabilities, liabilities account, capital account, revenue account, debit decrease, debit decrease, credit increase. List of Indian essence things. One, starting from one. um, Accounting system. First of all, we started accounting system. Every organization entered into the number of transactions during its the course of building or the achievement of the objectives. These transactions affect the assets and the liabilities. For example, of the purchase of the fixed asset of long time of the use of an organization, purchase of the sale of the goodness in the business entity, payment of the salary to the organization, purchase of the sale of the behavior of the business entity to the employee of the organization. It affect the assets of the liability of the organization and these of the financial position, as this transaction is generally or likely number of the possible of the person or the group of the person or the remember of the transaction. Therefore, it is necessary to record the classification of the transaction is a very systematic way. At the end of the period of the transaction should be the summarized. We know about the result is the activity and the summarized financial record in the financial statements that are interpreted and the communicated to the user of the accounting information need to be the decision making. Definition of the accounting. The traditional definition of the accounting has been provided by the American Institute of Certified Public Accountants AICPA, which is follow. Accounting is the art of the recording, classifying, summarizing in the significant manner and the term of the money and the transactions and events which are in the part of at least of the financial one, at least financial character and the interpreting the results thereof. As a part of the definition counted in the arts meanings, trying these types of skills may be exercise skills as an insult of the knowledge and the practicalities in the meaning that accounting and the requirement requesting of the skills and the persons learn to do the knowledge and the practice. The overthinkings of the peoples and summarizing the generation of the accounting and information, the fourth step of analyzing the interpretation of the insult of the transaction and the events. Accounting process consists of the recording, classifying, summarizing, and interpreting the transaction of the interpreting, which are the financial nature of recording, is the process of the interpreting transaction and event of the books of the original entity of the chronological manner, and the date wise the classifying is the original entity of the chronological procession of the positive interest and the ledger, so that the transaction of the similar type of accumulated in one place. Summarizing the concept with the preparing of the financial statements such as income statement, balance sheet preparation, financial statements such as income statement, balance sheet, and cash flow statement. Interpreting is the next stage of the accounting process. The accounting should interpret the financial statement in such as the process the way of that the useful of the usable accounting information the way of that they are usefully user and the accounting information the accounting information system should be designed such as the right of the information to communicate to the right person at the right time. The process of recording business transactions in the systematic manner and the classifying them into ledger term as a bookkeeping. In 1966, the American Accounting Association, the AAA, defined accounting as a given below. Accounting is the process of the identifying, measuring, and the communication economics information to the permit information, judgment, and decision by the issues of information. The definition emphasizes the need of the communication economic information so that the user of the information can be take normative judgments and the decisions. Smith and the Abraham Adams confirmed the following. Accounting is the science of recording and the classifying business transactions and event primarily of the financial characters and the art of the making significant summarizing, analyzing and the interpretation of the intersection and the events and the some communications result of the persons who must make decisions and the form judgments. These definitions says the accounting is the both the science and the arts. So science means a statement and the formulated knowledge and organized body of the knowledge that has been accumulated on subject branch of the knowledge, one that can be conducted on the scientific principles. Accounting can also be called science. It is the organized knowledge based on the accounting principles which have been formulated after the lot of the experiences. Accounting as an art already been explained in 1917 and the accounting principles support of American Institute certified public accounting gave the following definition. It may be noted by the bookkeeping is concentrated with the recording of the business transaction in the systematic manner and the classifying them in the ledger. It is mechanical and the representative in the nature. It is the first part of the accounting. Accounting is the use of the wide sense of accounting, including the design of accounting system, perception of the financial statement, interpretations, financial statement, and the communication of the accounting information issue its use besides of the reading and the classifying. Accounting delays with the transaction which is the primarily or the financial character according to the Kotler. A dictionary of the accountant's transaction is the event of the condition and the recognition of the which gives rise of the entry is in the accounting records. According to the Financial Accounting Standards Boards, FASB and USA, the event meaning of the happens. Accounting as in the informations. Accounting as an information. Accounting as an information. The system of collecting and the process of the transactions data and disseminating information through instruction parties of the known as the accountability and the information systems. The design of the information system depend on the following factor: nature, business transaction in which entity engage, the size of the firm, the volume of data, informational demands or the users. Inputs: business transactions of the financial character, purchase and sale of goods, processing, recording, classification, summarizing the business transactions based on the accounting principles, standards, management estimates, Companies Act, Income Tax Act, other acts, regulations. Nowadays, software package like Tally are the commonly used in the processing of the outputs. Output, profit and loss account, balance sheet, cash flow statement, explanatory, note tax, return, other regulatory filings, other special purpose of a statement, internal reports, owners, inventors, lenders, managers, suppliers, customers, employee, government, regulatory authorities, public, security, analyst, equity, researcher, accounting information system, internal user, external user, internal user, external investors. Investors provide risk capital to the enterprises. Who are the investors? Investors provide risk capital to the enterprises. They may be retail investors having a share in a small quantity or large mutual funds, pensions funds, private equity firm, a provider of a risk capital. They risk of a loss or low profit accounting information enabled the investors to identify the company were where they are get good return on their investments. Thus, the inventors needed accounting information to decide whether to buy, hold, or sell the shares of the certain company, as well as information on the excess of the ability of the company to pay in dividends. So private equity firms are interested in the investing in the C company also, so that they can earn substantial profit later on. Lenders providing loan to the lenders providing loan to the enterprises. They are the bankers, development financial institution, and debenture holder. Long-term lenders and the interested mainly in the knowing of the solving positive and the short-term leisures are the primarily interested in the liquidity and the profitability of the enterprise. Therefore, they are interested in the information which would be enable forecastings to repay loan and interest on the loan on time. In addition to the financial statement, the lenders can also use reports on credit rating agencies like the CRISL, Credit Rating Information Service of India, Credit Rating Information Service of India, CARE, Credit Appraisal Rating Agency Limited, to know the credit worthiness of the enterprise. Supplier of a goods and services. The supplier of a good and services, also known as a creditors, and primarily interested in the liquidity position of the company. Liquidity analysis means analysis donor of a knowledge the ability of the enterprises to meet the short-term obligation of the ordinary courses of a business. When they are satisfied of the enterprises is able to their dues on the times, they are also interested in the long-term continuity of the enterprises if their survival is dependent on the services, as the case for the small or ancillary associations. Managers needed as well as to create financial information. They prepare and they present financial statements and other accounts things information to be used to the other use of in the many other own decisions. They needed information for the financial statements analysis purposes for taking various policies decisions, so plan of a control and the operations and the enterprises. Employee and the trade union employee are the interested to know the profitability and the stability of their enterprises as their salary, wages, and the benefit of a dependent there. The inter alia on the inter alia financial condition of the enterprises potential employment may also be accounting information to the decided whether to join enterprise or not. Past employee also have interested performance of their customer are the leader of the accounting information, so they are interested in the stability of the capability of the customer who want to purchase customer durable like of the government and regulatory authorities. Central government, state government, local authority are concentrated with the activity of the enterprises. They need accounting information to estimate and regulate their unethical businesses practices and to formulate taxation policies. Regulatory agencies, Securities and Exchange Board of India, SEBI, Reserve Bank of India, RBI, Insurance Regulatory Authority, R RIDA, R RADA, IRIDA, Regulatory Authority of India, IRIDA, RBI, SEBI, RIDA. Telecom Regulatory Authority uses of financial information to the take action in case of a violation against the enterprises. Stock exchange need information to listed companies for various purposes. The public enterprises affected the general public in the various ways. They may be employing personnel from the local community. They are the purchase some of the goods from the local supplier. They may open school or colleges in the locality. Accelerated units come in the area in which a very big enterprise is established. Business and employment opportunity increased where such as enterprises established and thus help in the prosperity of the region. But the enterprises should not blindly exploit natural resources and must take pollution control measures. Therefore, information is required by the people public to know whether the public is would like to be enterprises. Security analysis, credit rating analysis. Security analysis need accounting information for the reading They analyzes the financial statement in the better way of the compared to the ordinary investment as they are exempt of this area. They advise their clients and the other whether to buy, hold or sell security. A researcher is interested in the accounting information if it is necessary for the purchase of this. His research credit rating agencies needed accounting information for the rendering valuable services to their customers. Quantitative characteristics of a financial statements. Qualitative characteristics: understandability, relevance, reliability, comparability, utility, timelines, complements, faithful representation, procedence, substance, available, verifiability, understandability, relevance, reliability, faithfully representation, substantial, one of the nearly the presentation of the function of accounting, maintaining the statement of the records, calculate the profit and loss, assessments of the financial position, communicating accounting information to the user, meeting legal requirements, determination of the cash flows apart from the profit and loss account and the balance sheet. A cash flow statement is appropriate to the no inflow and the inflow of the cash and the cash equivalents from the equality of the estimating and the financial activities. Further, in the case of the listed companies and therefore legal requirement of the SEBI guidelines to prepare in the cash flow statements and the preparation of the internal reports of the decision making and the various protecting various assets and the forecasting. They use the current and the past of the financial statement process of the financial statement for the coming year can be prepared. Filing a tax return. The statement according to the recording provide the best basis of filing the tax return. Therefore, may be difference between accounting income and the taxable income. This is the because of the fact that the income statement is prepared as a general acceptance accounting principle and the taxable income is calculated as the per provision of the law of income tax. However, of the certain items of the revenue expenses is with the gap between they are not allowed as a part of the law of income tax. Advantage of accounting assistance or to management systematic record facilitates comparisons assistant in the legal and taxation matters citation of a value business limitation of accounting non-monetary information is ignored assets especially fixed assets as shown in the historical cost accounting information respect of the certain item of the agreement estimate limitation of accounting non-monetary information is ignored. The accounting is those transactions and the events are reported which can be expressed in terms of the monetary statements which affect the business. देखो बैठे बैठे भी कट गए 30, 40, 50 people are joined on that line. After 2 years I would have started the line. इसका नाम पूछे ना तो पता ना बोल होता है कौन से एमडी है मंडल का सीन कौन सी WhatsApp as well. WhatsApp crazy. The 40-year older sniper. WhatsApp buddy. Hi all buddies. हाँ टुडे कैसा रहा. How are you all persons? How are you all? How are you all? Tell me this live. Credit the giver. Credit the giver. Credit the giver. What credit goes up? What credit goes down? What credit goes out? What credit goes out? See you. हट जाओ मैं लाइव से.